all see you. All right, everybody, say hello to Bobby Zappatelli. We actually got to know Bobby. He wrestled at Lake Catholic, where my husband's well, he's a head coach now. He wasn't at the time Bobby was there. But my kids grew up with Bobby tormenting them, and my kids absolutely adore Bobby. Like, they followed you in college. They still want to know how you're doing. They're at Lake Catholic now. But we got to know Bobby's parents through that, and just realized when we decided to switch accountants, just how successful their company and their business is. I mean, they're widespread. They take care of a tremendous amount of people. When I'm talking to people and say, hey, we use we use Zappatelli, they're like, oh, so do I. So do my parents. So do you use as well? Yeah. They're fabulous. Not only taxes and accounting, also financial planning. So there's a lot of different things that they do. Bobby, is it owned? I know Bob and John, your dad and your uncle, they're brothers, right?
Mm-hmm.
And they both have their own specialty.
They do.
But is it just the two of them?
It is.
Yes?
Yes.
Yeah, it's wonderful. And the whole family works there. Like, it's great. It's awesome. In fact, quite frankly, I've structured a lot of things in our world based on watching the Zappatelli family. So I'm like, oh my God, that is so cool. That is so cool. So besides being extremely talented in what they do, just really good people. Okay. All right, Bobby. So what do you got for us today?
Oh, thank you very much, Tina, for all those nice things. You said it. We appreciate it. I've known, like Tina said, I've known her and her family for a very long time. Wanted to say first and foremost, thank you and Tina and Michael for having us today. It's unfortunately just me today. Diana could not join us. So I'm sorry if you hear phones behind me. I'm at my Bacon Road office. Just a couple things. We're going into tax season, and for realtors, you guys are so busy during the year, but during the year, a lot of things happen. You guys go to a lot of showings, a lot of different, you guys have a lot going on. You guys are kind of on the clock 24/7, going to listings, showings, meeting with potential sellers and buyers. So we just wanted to make sure you guys are aware of all the different tax savings you guys are, can use. And what I'm reading off of is actually on our website. I'll send Tina the link so she can send it to everyone. Just kind of some expenses realtors can use. Number one, before I even begin, if you're a realtor, I know you guys get 1099. Maybe in your best option to set up an LLC and turning that LLC into an S Corp. The reason being, number one, you can flow all your income through there. And there's a lot of different options you can do after that, and that could be very tax beneficial for you. Another big reason to set up an LLC, you get your own bank account. And if, say, for example, you're out buying something for a buyer or seller, you can use your bank, your bank card. It's really, really easy to keep track of it that way. So at the end of the year, if you were to go see your accountant and your accountant says, hey, what are your expenses in February? If that's not categorized correctly, you'll probably lose an expense and so on and so forth. And, a lot of those smaller expenses add up after a while. So we recommend, if you're an LLC, that's great. Look into becoming an S Corp, and, we can have another meeting about that. It would be very, very beneficial for you. But some expenses for as a realtor, advertising, meals and entertainment, your business miles. Along with your business miles, there's different apps you can use on your phone. If you folks don't have an app already, there's different apps you can use. Sorry about my phone. I'm the only one here, but that's okay. There's different apps you can use that can track all your mileage. And at the end of the day, it's simply swipe left or swipe right. And after a while, it's a lot of tax savings for you at the end of the year. And for realtors, that's one of your guys' biggest expenses is your business mileage. Insurance, I know you guys have to carry insurance, health insurance. If you are self-employed, you can set up with your own health insurance program. Professional and legal fees. I know realtors, I take care of quite a few realtors myself, and I know there's a lot of fees that you guys have to either renew every year or every other year. And those fees, could be a couple $100 all the way up to $200, depending on what they are. Office supplies, your cell phone, you guys are always on your cell phone, calling people, texting people about listings. If there's any professional dues that you guys are paying for, that's another expense you guys can take. And seminars, training, and education. So if you have to get more education in a certain area to do certain closings, you would be able to write that off if it's for your business. Now, I know a lot of you may go into the office or may work from home. At another time, we can talk about it more, but you could even write off your office in the home, which that comes with its own expenses, and it could be very, very beneficial for you. So, and subscriptions, and if you have certain subscriptions to certain websites for, for showings, listings, different stuff like that, you can also write that off. Our main goal today, and gifts for your clients, they do have to be under a certain dollar amount, but you would be able to write those off too. But our main goal today is we just wanted to, number one, introduce me and my company to you folks, let you know there's a lot of different expenses. I'm sure most of you have seen these expenses before. Some of you may not know that you could have taken certain expenses. That's what we're here for. I would never go and sell my house on my own, just like I would never go change my oil on my own. I'm sure I can do it, but that's why I would leave it to the professionals like you folks, because you guys know, how to sell. You guys are with a tremendous team. I mean, everyone knows Michael Kaim and the team, and I mean, you guys are with a real powerhouse. And so that's why, at me as a customer, I would always go to you, because you guys would do the best for us as, either buyers or sellers. Likewise, if we were your accountant, we were trying to get every expense we legally can for you. And so Tina mentioned, and if anyone, like I mentioned earlier, I'll send that link to Tina, and Tina can kind of send it out to everyone regarding, some business expenses, but just some other things to kind of put into perspective for this upcoming tax season. There's going to be a couple changes, and so it's going to be crucial for you as a taxpayer to know these changes and to make sure you file your taxes correctly. And then Tina mentioned something when her and I spoke last week. Some of you are already set up as LLCs, maybe elect to become an S Corp down the road or sometime this year. It's a lot of tax savings for you. For example, if you are an S Corp, if you're a self-employed LLC owner, you pay income tax on self-employment, which is Medicare and Social Security's tax, on the entire share of the company. So if your company, at the end of the year, your gross bottom line is, let's say, $20,000, you're going to pay a pretty good chunk of tax with the Medicare and Social Security. But if you're an S Corp, you are considered the owner, but you're also considered an employee. You would pay yourself a reasonable salary, and then all the other income through your business would get all the other income from your business would flow through to your personal tax return, and you don't have to pay any additional tax on top of that. The S Corp, though, and we'll get into, if anyone were to have any questions, please give me a call. I'll give Tina my office number and my cell phone number if you guys were to have any questions. But it's a lot of tax savings, and it just, it depends on if it's worth your, where you're at as a realtor, if it's, worth the savings for you. And I was just, I didn't know, Tina, if anyone had any quick questions I can answer for them for their taxes.
Any questions for Bobby? Oh, please, you're usually not a quiet group, let's be honest. All right, so real quick, you said that there are some changes to the tax code. Is that for 2021 or things that happened in 2020?
You know, the biggest thing we're seeing is it's for 2020. If you were to receive a stimulus check, you got to know the exact numbers of your stimulus checks, the first and second ones. A lot of, I don't know who became a realtor this past year in 2020, but if you did, you know, there's a lot of upcoming expenses you may not be aware of. So maybe start now, kind of go through, and if you don't have a separate, you know, debit or credit card you use for your business, kind of go through month by month and see, hey, this purchase was actually for business and not for a personal use. Like I said before, those small expenses over time, over the year, they become pretty big numbers. So just kind of, and I'm sure most of you already do this, but just kind of make sure that you're on top of all your expenses, because from what we see, and especially with the, you know, those mileage apps, a lot of people miss out on a lot of big expenses, a couple $1,000 swings, and it's kind of a big deal. And if you guys need any help in retirement, depending on how your business is set up, we can actually help you guys start retirement planning. You know, maybe set you up with a traditional IRA for a nice tax savings, which can be, or a Roth IRA, which is not a tax savings, but it's still an IRA. We can help you guys with that, and we'll be more than willing to help anyone here, or anyone in general.
All right, and did I hear that meals and entertainment, which has always been a 50% deduction, is going to be, or is now 100% deduction?
I didn't hear that, but I have to read things a couple times, but you very well could be correct. I just have not heard that. And usually, you know, once a week, I try and brush up on at least some tax laws, just to help out our clients. But I can definitely double check and get back to you guys with that.
That adds up. Your travel expenses. Absolutely, you should write up all the stuff for the travel for the conference. I just put it as a one-liner, and you know what my travel was, my air, if I rented a car, even if I Ubered around town, like I'm there for an event or I'm there for a seminar, or and I will tell you that even when I travel and it's not all for business, I will always make a business stop or attempt. If I'm in Naples, I'll stop in and see the Berkshire Hathaway in Naples and just have a half-hour meeting with them, because that means I can now write off part of my trip. So you just got to be strategic about it and try to be smart about it. Does anybody have a really good business miles app that they use that they like? Go ahead.
Sorry, Ken, I actually use, because we're also notaries and signing agents, we use, I can't find, I think it's called like Mileage Log. And, you know, it's a great app. It just connects to your car, and every time you stop or, you know, you go somewhere, it will log it. And then, you know, at the end of each week, it'll get a summary get sent to you and say, hey, this drive from Painesville to Perry, was this for business or is this for personal use? And it's essentially a swipe left and a swipe right.
If you don't have it, get one. I mean, these types of that's one of the biggest write-offs.
And that buying the subscription on your phone, that's a write-off too. So that's all a write-off.
It's all a write-off. Yeah, I think it's huge. Business miles is huge. You know, I don't have the mileage app. Being a realtor, I should. I figure a percentage. You know, I take a look at how many miles on January 1st, I take a photo of the speedometer in my car. And so I can see exactly how many miles I've gone from year to year. It's in my thing. A little alarm goes off, take a picture of your speedometer, right? I do, because I need something to reference, because, you know, I'm busy. And then I take a percentage, which is probably not the best way to do it, Bobby, but I say I drove, you know, 70% of my miles is probably business. Or when I take a look at this past year, I did a lot of traveling with my daughter. So maybe only 60% of my business is business related. So, but if you actually have the hard numbers and you get audited for any reason, you want the hard numbers. So it's better to have the app. It's like anything else. Just make sure you know that you do it. And I remember I did test a couple of mileage apps a few years ago. And if I remember, it used to send me a reminder that I needed to swipe.
It does. It's super helpful.
Yeah, it's gonna be a reminder that, hey, you haven't decided, is this personal or was this business, right? All right, let's see. What else did I wanna? If you have the home office space and you have like say a whole bedroom devoted to your office, because I work in the office more than not, I haven't taken this myself, but my husband has for his business in the past. And we are able to include other things, like you have to do a percentage of your house. So, depends on the size of your house, I guess. But based on the size of the percentage, we also would take deductions like if there's home improvements or electric and gas. And, we took whatever percentage the office was, we also kind of counted those expenses in a percentage of those expenses. And again, that stuff adds up.
It does. So say, for example, you live in a 1,500 square foot home. Your office is, 180 square foot. What runs through your office, utilities, internet, phone, electric, gas, that, and you can only, like Tina said, you can only take a certain percentage, but every percentage helps, in our opinion, or every expense helps, I should say.
It does. And remember, when you're taking a look at expenses, you've got to keep in the back of your mind what you're doing in the game of life. Like if you make $50,000 and you have $40,000 in expenses, you now made $10,000 last year. Now, if I want to buy a house, that's going to be a problem, right? So again, that's why I find it very beneficial. We have a meeting every year with Zappatelli. We take a look, where are we at? Where are we going? What's changed? And it just kind of helps put you into perspective as far as where you need to be and what you need to work on. How much more you have to save, because the older you get, right? So it's extremely helpful. Anybody else questions? Anything you want to ask Bobby while we've got his expertise here?
I've got a question, Tina.
Go ahead, Brad.
Hey, Bobby. Brad Klemick.
Hi,
I
Brad.
have a question in pertaining to the PPP loans and forgiveness. I actually have two questions. Number one is any amount forgiven on the PPP, is that included as income and taxable?
Yeah, so Brad, what they're doing is, and they've the PPP is a blessing, but it's in about a year or two, I think it's going to be a big curse. So as of now, like towards the end of the year, we started doing a lot of forgivenesses for our clients, and then they just stopped doing it and they shut off all the portals. Now they picked it back up. So what we're doing, and I'm actually not working on a lot of PPPs. We have a couple other accountants. My sister Diana is doing a lot of them. From what I understood from what she said, so say for example, you got you got $100,000, you would put the additional $100,000 on as income, but you would have all the expenses to go up against it. And I believe, and don't quote me on it, but because I'm not working on it, but I believe after all those expenses, it's essentially a wash. But that's kind of what it is. So whatever you get, yes, you would be putting it on as income, and then all the expenses you run up against it should, if not, erase everything.
Okay, so it is tax then.
From what we understand, it is, but mind you, they're coming out with different stuff it's literally every other day they're coming out with different stuff. There's banks that were supposed to open it up last week and they're still not open, and now some of them are. I know KeyBank just opened theirs. I'm working with a client to get all of his stuff ready for that, but I mean, it is changing, and I'm sure it's going to change again.
Okay.
And now I just saw there's a second PPP out, and I just got the email on it, and it looks like if you missed the first one, there's some reasons you can qualify to try to get some money. But if you receive money on the first one, you could also.
Yeah, that's correct. You can go back again and get more. What we're seeing with a lot of our clients, and it's not really talked about a lot of people after everything did not have that bad of a year. If your business did less than, if you lost more than a quarter, 25% of your business through certain periods of the year, you can reapply for it. But like I had a couple clients, they wanted to go for it, and I was just looking at everything. I'm like, you guys can't go for it. You guys barely, you guys are only down 15%. Where they still want to go for it just to see if they can get a little bit. But the PPP helped a lot of companies out, but the companies like the restaurants and a lot of the companies that got shut down that have not been able to reopen, they're obviously going to go for it more. But a lot of companies, a lot of factories, they can or they cannot go out. Most of them can't go for it because they didn't have that bad of a year, and they were really diligent during that time of lockdown.
Yeah, I know it's a case by case. I feel like every time we do one of these things, if it's free money, why not? Everybody else is looking for the free money, right? But on the flip side of it, we're going further and further and further in debt as a country. And there are people who really need it, and there's only so much available.
Mm-hmm.
Right? So it's kind of a catch-22. It's hard. So only you can decide what you want to do. If somebody wants the information, I just received an email yesterday, maybe the day before, from my personal bank who said, here's information on the second PPP. And I talked to my husband and we've opted out of it. But there's pretty strict guidelines, which is good.
And a lot of banks aren't doing it anymore either, because the banks truthfully can't handle it. So a lot of banks, certain banks, I know Huntington's doing it, Key Bank, but I heard a couple other banks, I don't believe Citizens doing it, but there are a couple other banks that are not doing it. So, just be aware of that. Last thing, if anyone took any unemployment this past year, be looking for a unemployment tax form from the state of Ohio. That's going to be a big thing this year. So you are going to receive a tax form for it. They usually send them out the last week of January, but I'm sure they're a little delayed, just like everyone else. So if you were unemployed and you did get unemployment, just be aware of that. We've seen it in a lot of cases, even without the pandemic. In prior years, people were unemployed for a month or two, didn't think anything of it, and they go and file their taxes, and then 6 months later they get an IRS letter saying, hey, you forgot this couple $1,000, income, these are how your taxes change, so on and so forth.
Got to pay taxes on your unemployment, huh?
Yes, you do.
I just found out you have to pay taxes on grant money. My son, who was in college, qualified for some academic grants, and I just got a 1099 form for it.
Yep. Yeah.
Really? Damn. I'm better than having to pay for the whole thing, I guess, right? But I guess it must have been in the fine print. I didn't notice that. So, all right. So again, be diligent, be conscientious. If it starts to get beyond you, as far as being able to do it yourself, talk to someone smarter than you. The costs to have somebody else do your taxes, you could make a ton back in savings, right? So again, everybody's situation is different. I'll also tell you that, I don't know, I thought it was a few years ago, you guys switched me over to an S Corp. It was actually back in 2014. Time flies. I would just pull it up. And it was substantial, it was substantial. So it just, again, everybody's situation is different. Talk to someone smarter than you. We say it all the time in regards to this business. Same thing when you're taking a look at any of your finances. All right, cool. All right, anybody else have any other questions? Thank you very much. Let's let Zipporah in. Thank you very much, Brad, for that question. It was a good question. Anybody else? Questions for Bobby? All right, he's going to send me the link to their website that has a list of expenses. You can't open up a business account unless you have a separate EIN number, right? So you've got to get an LLC or you've got to get an S corporation in order to get that separate account number. If you feel as though you don't want to take the time to do it, it's not very expensive, but you still don't want to have that expense. Even if you open up a separate checking account, that's a personal account that you run all your business stuff through. So when you go to pay for something and you pull out your card, you're pulling out this is a business card. This is where I put all my businesses, all my gas is on it. It just makes sense. It makes it so much easier because again, we're running fast and running hard. It's $150.
Most of these companies are $99, and then they charge it $49. And if you start filling the application out, and really don't finish,
All right, so you must have started filling out the application and you didn't finish. And then they started sending you discounts like, hey, you left without getting incorporated. Why don't you? Alright, is there,
And that's a write-off too.
because that's a write-off too. All right, so if somebody's just starting off, I mean, is there a certain dollar amount where, like, if I'm making 30,000 in real estate income, or I'm making, 80,000 or, whatever, 100,000 in real estate, is there like some kind of a number where it's like, you really should get incorporated?
Well, number one, whenever you start something new and it's, if you're essentially self-employed, it kind of always be nice to set up it with at least an LLC first. And then you kind of take it from there and kind of take it how serious you are, your new job, and to see if this is actually for you. Setting up and dissolving an LLC is no big deal. It's very easy to do, but in my opinion, I'd give it 3 months. Yeah, I really like this job. I'm doing a lot of closings, or not closings. Buying and selling homes. Really love it. I love everything about it. I would start to get more, serious about it. And then, yes, then that's when I would become like an S corp. And if you're an LLC now, you got to fill out one little form and we fax it into the IRS, and that's it. You're an S corp now.
Cool. Did you just do it? Good. Yeah, good. All right, good. All right. Anybody else in the room? Anybody else online? Have any